inverted head and shoulders or a bullish bluff. Also, the absence of bearish triggers are keeping me somewhat bullish in the short term. Let's take a look at the charts. Friday's sell-off that we can see here, while it is ominous, it did rebound intraday. And what we can see is this on the 30-minute charts, this inverted head and shoulders, which gives us a neckline of around 59.80. So one of the things that we could see going into Monday's trading is that gets a lot of the intraday bullish traders excited. It might drive some liquidity to push things higher. The only fly in the ointment is, again, when we look over at the daily chart top left, is we have this half body, half spike. So again, if I just draw it out, we looked at this last week. We had a similar setup where we have, half the body of the candle, is the body of the candle, and then the other half is the wick. And this, for me, it normally suggests that we're going to pause first before we see any directional movements, whether it's bullish or bearish for that matter. But it typically does suggest a pause in price first. The fact that we do have that intraday head and shoulders pattern or inverted head and shoulders pattern does suggest the bullish movements. And again, when we look down at the ADD at the bottom left, we're at this bearish extreme. So it does again suggest that the bullish potential is there in the short term. And lastly, with no bearish pulse bars developing, again, we have gone through my initial bear trigger, which was essentially Thursday's low, through the big psychological 6,000. There's just no bearish pulse bars. So what I'm going to do, because of this head and shoulder, or this inverted head and shoulders pattern, because of the spike that inevitably developed on the daily chart, I'm going to adjust my bearish trigger to below 59.30. And again, I'm still waiting for those bearish pulse bars to develop. And again, they're just not developing for the moment. That's going to be the final indication to say, hey, we've got some bearish potential here. Obviously, I would like to see ADD push higher, up to that plus 1,000 level first. And again, the way the market's going, we could gap up to that and then push down. So that would give us that bearish potential. But for the moment, I'm not seeing the bearish potential, or at least anything to worry about in the short term. We do have a shortened trading week, again, very similar to the Christmas week as we go into the last week of the year. And we've got the half day on Tuesday, we've got New Year's Day on Wednesday, and then we're back to business as usual from Thursday onwards. So very similar to the Christmas week. So we're going to have this stop-start trading week, which again just reaffirms the potential for price to just pause and meander as we drift into the half day and New Year's day, and then we see that follow through movement, assuming that we get the bullish move right into the end of the year and into the start of next year. So again, the Christmas rally, it could still be on. The talking heads may still lose their minds or have an opportunity to lose their minds, but we still have that potential to see the official Christmas or Santa rally the last 5 days of the year and the first 2 days of the new year. So it's still on. And again, all the groundwork is being laid for that to happen. Again, my trades are still bullish, and I'm waiting for the income trades just to cash out. I mean, a neutral to bullish move will see some profits for me anyway. So there's really nothing to do other than wait for the target exits to be reached. If you like what you heard and want to learn my exact system or one of my systems to find daily opportunities, then click the link next to this video and you'll be taken to a free training where I outline one of my favorite money making patterns. And if you click the link, I will see you over there.